Hi, this is Flo. In this video, I would like to share the outcomes of mapping the episodic pivot setup on the SPY ETF using data collected during a deep dive. It was a very useful exercise to do as it showed additional elements of the episodic pivot, which will be shared later in the presentation. Here are the open questions covered this time. How many episodic pivots happened per month from 2017 to 2022? Is the bullish bearish market or the quality of the catalyst defining the type of episodic pivot? Very important question. What sectors produce the highest number of episodic pivots? And the last one, there will be a small side-by-side comparison between the breakout setup and episodic pivot setup performance. During the episodic pivot deep dive, I looked into the US stocks and ADRs above $3 with average daily volume of more than 100K. No biotech stocks and no ETFs were selected. The timeline of the study was September 2016 to September 2022. All the selected stocks were split into two main groups based on their market cap, so below 10 billion and above 10 billion group, and you see on the screen the number of EPs that were identified in each of the groups. Have in mind there is a survivorship bias in this study. All the selected EPs have an 8% gap up or higher compared to the previous day close. So there is we review in this study and we studied the bullish upwards momentum and the catalyst in the good news and the catalyst in the upwards direction. Here's the first question that I looked into was how many episodic pivots happened per month from 2017 to 2022. What you see on the chart on the screen is a chart from January 2017 to September 2022. And you see right away there is a significant number of episodic pivots or gap uppers of 8% or more happening on the market. Don't take it yet though this as a good news. We'll look into the data in more details a bit later, but we see that there are a lot of these events happening. What we also can learn from this chart is that in the past there were more episodic pivots. Before 2020, there are higher peaks and more episodic pivots compared to the recent days when we don't see that many. Most likely you also saw that unusual event that happened in November 2020. We'll get to that in a bit. I would like to also put side by side the episodic pivot charts with the breakouts chart because there is something we can learn from that. I know that from the breakout setup likes a lot the momentum and the bullish environment, so we can see that, and I saw that during while making the breakouts map. So this is a bullish environment and we see more EPs also happening in the bullish environment, a similar trend. Bearish environment, there's significantly less EPs. Bearish environment, significantly less EPs in the more recent days. Bearish environment, significantly less EPs. So there is another conclusion we can make based on the data. EPs favor bullish environments. Here's the unusual event that happened in November 2020. On 9th of November, in the same day, in one single day, took place 88 EPs. So 88 stocks had a plus 8% or higher gap up. After looking for the catalyst, here it is. So the catalyst of this news was a general public news that Pfizer and BioNTech reported that their COVID-19 vaccine had been found to be more than 90% effective in a late-stage trial. So that was the catalyst that created this significant move upwards and so many stocks having this move. However, this is not a statistically relevant event if we take it like on the overall data and can create some misleading numbers That's why for later in the presentation, this day in particular will be removed from the data so that we see what happens more or less in a normal time on the market. During the Episodic Pivots deep dive, I also came up with a small classification of the EPs. It's a little bit kind of a weird classification, but it's memorable, and at least for me, it works to easy identify the type of EP and have them in mind as part of the setup. So I saw that some of the EPs have a sharp, like they move up and then have a sharp change of direction. And because of this move and because they chicken a bit, I call them chickens. And then there are EPs that move upwards and then go into a sideways channel, and I call them ducks. And there are a lot of them, around 57% of the total EPs. And there are EPs that continuously go up in a steady move upwards, and I call them swans. So here's the data including November 2020, but then I tried to adjust it a bit. So what I did next is I excluded 9th of November out of the data, and also I adjusted the timeline from January 2017 so I can have a side-by-side comparison with the breakouts events and how many of them happened and so on. And this is how the data looks like now, and significantly less swans actually on the overall data, from 30% decreasing to 27%, because in that day on 9th of November happened a lot of generated a lot of swans. So actually the number of high opportunities for profits are significant, are a bit less. And what you see on the data before 2020, there were more opportunities for higher profit. In the recent periods, this type of setup is not so common. Have in mind 2020 data is until end of September. Yeah, an interesting insight from that representation of data as well. Now looking into the breakdown per type using the same chart to see what type of patterns could be identified. Here is the number of swans that happened, visible on the chart that before there were more significant move upwards, and recently there are not so many. And then I'll try to also highlight a comparison with the breakouts. For example, look how many swans happened. So from April 2019 to April 2020, there were almost no swans, no stocks with a significant move upwards, but there were so many breakouts. Not so many swans, so many breakouts. Looking at this chart side by side, I was learning for myself, and I was concluding that, wait, I like the breakout setup much more. So yeah, that's one learning from this point. And then the charts also show, we can see here a significant amount of dots. The catalyst and how to profit from this type of EPs is still something I'll continue to look into. But for now, overall, what I can see is that, for example, in this case, there was a couple of swans happening, but there was also so much noise and so many ducks happening. So the sideways moves. So these moves could create some false expectations, which I also took as a point for myself. And here they are, two main points after looking at the previous slide. Profitable breakouts happen more often and have a cleaner signal than the EPs. So that's something I learned, and I start to favor more and like the behavior of the breakout setup more than the episodic pivot setup now. And then the second point, there's a lot of noise that can create false expectations. So a lot of those gap uppers and thinking that this is the highly profitable EP, which can lead to a lot of chasing and a lot of false expectations. So that's something I also learn and make it clear for myself. The setup has significant background noise, but that's something still to be finalized and decided after catalyst analysis. Then this was the next question I looked into. So is the bullish bearish market or the quality of the catalyst defining the type of episodic pivot? What I want is we to do together an exercise where we will first look for clues and evidence that the market has a significant impact on the type of episodic pivots. So we look for the market impact. Before doing that, I'll try to present the chart. So what you see here on the screen is a SPY ETF with each arrow is an EP color coded in this case based on the type. So if it's yellow, that means it's a chicken in the below 10 billion group. Then how to read it and how I read it. Let's take it as an example. This one, we see that the EP happened in this day, but then soon after there was a market correction, significant market correction. And actually this one, we know that the chicken setup, like as a classification, this setup usually EP does a couple of days upwards and then moves sharp change of direction, or right away a sharp change of direction. So we can see that this move could be caused by the market's correction itself. So this is how you read it. You look at the color, you see what type of is it, and then pay attention to what happens next on the market. So here's what I could see based on these episodic pivot maps. Sideways market creates sideways EPs, so a lot of purple color. These are the ducks, so sideways moves. Market corrections more likely to create EPs that have significant change of directions. So significant change of direction, there is some market correction happening. These EPs had significant change of direction. There is market correction happening. Some market correction happening. Significant market correction happening. So we see evidence how the market is impacting the type of EP that happens. It's not only the catalyst. Then more profitable EPs in a bullish environment. We see here a very nice upwards wave, and some of these EPs were taken by the wave and they are more swans in this period, so more upwards moving stocks. Then next episodic pivots map. Here again, an upward move, significantly more swans. Upward move, there is some momentum here, significantly more stocks. Market correction alters the momentum of some EPs. Again, evidence for this here, chickens. A downward move, there are chickens around. Again, the same thing here again. So we see clear evidence the market changing the shape and the performance of the episodic pivots, significantly less EPs in a bearish market environment. A choppy market here, which also creates more than usual yellow color, orange color on the chart. So again, EPs that had a sharp change of direction. So now I know that this could be as a result of the impact and gravity on the market on this particular EP. Last one, the data for 2022. We see the bearish environment, less EPs, but also not so profitable EPs. And then the profitable segment of July, August 2022, when we also see a significant number of EPs, also more of them becoming significantly profitable. So I'll take it for myself, at least as a conclusion, market has a significant impact on the type of episodic pivot. Next, we look into another exercise. We'll try to prove that the catalyst has a significant impact on the type of episodic pivot. Do we see evidence on the examples where the catalyst was strong enough and go in a different direction compared to the market? Let's look for that. If you like the information, please give it a like and subscribe. It helps the channel a lot. Thank you. So let's look next. We look for the strong catalyst that had enough, like the catalyst that had enough power to have a different direction than the market itself. So we see here a market correction, but a stock that had a strong catalyst. It's also, when I say strong catalyst, it's not just the catalyst itself. It also depends on the stock, the quality of the fundamentals behind that stock. So it's more information attached to an arrow. It's not the same stock everywhere, but so let's assume that also the catalyst plays an important role. Then here a market correction, a catalyst that was strong catalyst, a significant market correction. Some catalysts were stronger than usual. Then I highlighted here weak catalyst because we can see a significant move upwards and these EPs didn't do much. Strong catalyst, again, here market corrections, choppy environment, what a significant correction, and we still can find some swans. Again, a swan in the market correction. Here, what a choppy market correction again, and one of the stocks that had a catalyst powerful enough to move the stock upwards. So evidence that the catalyst can be strong enough to give a shape to the episodic pivots. Strong catalyst again because there was a market correction here. Weak catalyst because there was an upwards ninth momentum, but most of them did a sideways move, most likely impacted by this move as well. And then market corrections, the strong catalyst highlighted here within the market correction. 2022 data, couple of strong catalysts happening, but overall less overall number of EPs. Based on this data analysis, I took it now as a conclusion that the catalyst can have and has in some situation has a significant impact on the type of episodic pivot. If you would like to study the data in more details for all the periods of 6 years, double check it for yourself, confirm it, do your own diligence. Episodic Pivot Map plus the Excel file with each of the EPs and the exact date when it happened so that you track them on the map. This can be downloaded in the link on the link in the description. Now, how I look at the big picture overall is I kind of assign to the market a specific sentiment. It can be bullish or bearish or moving sideways. And then on top of it, out of nowhere comes this catalyst and the news that drives the stock 8% plus upwards in the beginning. And then there is an interaction between the market and the momentum it has at that particular time and the catalyst energy. And as a result, it ends up in one of these positions where percentage-wise, we see that market creates this type of events. As I said, the study is bullish biased, so we didn't see yet what happens on the downward moves, but this is now a little bit of a bigger picture on how I see this interaction between market and the catalyst. Because of this significant interaction, what's coming next, I will look into a side-by-side comparison between the EP and when that event happened and SPY or possibly IWM to see how this impact plays in a closer look and in a day-by-day dynamics. So that's coming soon. And I will also try to do an episodic pivot catalyst analysis. The catalyst has a significant impact on the performance, and I would like to look into what type of catalysts are there, try to give them a classification, which are those strong catalysts that created that unusual move in a bearish environment to be so powerful to create an upwards move of the stock. So more coming on that. Please subscribe if you don't want to miss those studies. What sectors produce the highest number of episodic pivots? Looking to that, I will scare you with these tables right away. I will advise you to pause and look through the data. What I could see on my side is that something similar to what happened to the breakout setup per sectors. We see a couple of the sectors, especially technology, consumer discretionary, industrial, healthcare, and communication sectors. These ones are by far mostly responsible to create episodic pivots. I'll advise you to pause and look through the data in more details. A point I took for myself is that the watch list can be reduced to increase focus because 86% of swans and 85% of ducks are coming from 5 sectors: technology, consumer, discretionary, healthcare, industrial, communication services. Yeah, one point that could simplify the EP trading strategy, something to think about. Then the last one will be a side-by-side comparison between the breakout setup and episodic pivot setup. What you see here on the screen is the breakouts map. In this case, the arrows means a breakout that happened from a specific industry. So the color coding is per sector actually. And then the next one is the episodic pivot, in which each arrow means a type based on the classification. Let's go side by side. So breakouts for the exact same timeline period, episodic pivots. Let's go through the chart, reading it from left to right and side-by-side comparison. So breakouts on the left in a bearish market environment, no breakouts. There are still some episodic pivots happening, but they don't end up well or being profitable. Then we have the upwards move and more breakouts happening after a while. We see a very significant number of episodic pivots. Also, it coincides with the earnings season. Possibly because of this, we see more episodic pivots. That's something to be confirmed after catalyst analysis, but we see the difference here. Then breakouts are more consistent and more evident when the market has momentum. EPs are more clustered, and what I assume here is they happen more likely during episodic earnings season. So that's something to be confirmed, but this could be the case. Yeah. Here are the conclusions I set for myself. Breakouts are reactive to general market sentiment. They move and they appear when the market has a bullish environment, when 10 days is above the 20 days moving average. So this is a favorable move, and that's why breakouts also can be used for market sentiment diagnostics. Episodic pivots are a bit more random. They happen when the catalyst happens, so they are not related to the market momentum in any way. They just kind of come in the markets and react to that market sentiment. So that's something I said for myself, and they are highly dependent of future market environments. So that's also a very important point. We saw that the data is showing enough evidence that what happens next in the market later it will have a significant impact on the type of episodic pivots. A couple of last takeaways. The profitable EPs require an unusually favorable market environment. There's a lot of noise that can create false expectations and could exhaust your capital. Those stocks that happen in the background, and there are so many of them, can create that noise, and it's still to be confirmed. I hope studying the catalyst and studying side-by-side markets and the EPs will give more data on how to profit from the sideways moving EPs. But as of now, I see the sideways EPs as a sort of a noise that can blur the signal. And then before making additional conclusions, more studying is needed. So I'll go into these two elements and another episodic pivot analysis coming soon. That's why if you don't want to miss that one, please don't forget to subscribe. Thanks a million for your feedback, for your attention, for your likes, subscriptions, comments, feedback. Wish you a great day. Peace.